Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Yesterday, as widely expected, the RBA left its cash rate unchanged at a record low of 1% and maintained a wait-and-see approach to its June and July rate cuts. Despite a slump in retail sales yesterday, for July, the data is expected to point to a weaker Aussie GDP number due out this morning, with a forecast holding at 0.5%. At present, the market is fully priced in a rate cut for November, but there is talk of a possible cut earlier in October. Yesterday, the Australian Bureau of Statistics, the ABS, released the figures for the Australian retail sales, which missed its forecast of 0.2% and instead slipped to a negative 0.1% in July. In other figures released, data from the ABS showed Australia had recorded its first current account surplus since 1975, posting a 5.9 billion surplus driven by booming exports of iron ore and coal. But the market, from the result of the RBA keeping rates on hold, has staged a significant rebound from the support level of 66.85 and posted a bullish outside range day after taking out these two candles. It is assessed further confirmation is required since rebounding off the 10.5-year lows, and from that would need to see a break first of all above 85 and then on towards 68 figure 45. In my view, is the fact this has given us opportunity to shorten the market again, because overall I believe the market will fail towards 68 cents and still look down towards the region of 66.85, with the broader picture still holding to 66.20.45. At this stage, we have for the euro either a bullish hammer or pretty much close to a dragonfly doji, which in terms of this decline could be a possible reversal to the trend being bullish. The US dollar index, which measures the greenback strength against a basket of 6 major currencies, staged a significant turnaround, and in turn you can see here that we've got a very strong rebound in the euro. Overnight, as the US returns from a long weekend, Tuesday morning brought uncertainty to the US after the US and China imposed new tariffs on each other over the weekend. Along with that, a disappointing manufacturing report on Tuesday has reinforced fears that the conflict between the two countries could harm each other's economy. A key gauge of the US manufacturing sector showed that US factory activity shrunk in August for the first time since 2016. We knew growth fears from the numbers. According to the Institute for Supply Management's Purchasing Managers Index showed a reading of 49.1 last month, down from 51.2 in July. It is the lowest since, as I mentioned, 2016. The other factor as well is this week we still have the non-farm payrolls, and we also have Jerome Powell speaking on Friday. It is assessed that the market will be keeping a very close watch to these numbers and this highly event, which will no doubt trigger further whipsaw price action between the two sides. From a technical point now, the rebound needs to continue on at least up to 110.15 or challenge the level of this downtrend level, that 110.55 to 80. Support at this stage seen at 109.25. The dollar yen backs away from 106.80.90 and now looks towards the level of 105.50.60. It is assessed that further weakness could see the price action drop towards the level of 104.80.90, so keep an eye on that. It would seem we also have a posted bullish hammer for the pound. It was a mixed events overnight after UK Prime Minister Boris Johnson was defeated by the MPs taking control. Johnson said he would bring forward a motion for an early general election. Facing his first House of Commons vote for the first day of his new parliamentary term, Johnson fell to a heavy defeat as 21 of his own Conservative MPs joined forces with opposition parties to take the first stage of legislation that will delay Brexit. once again from its current date of October 31. From the rebound, this hammer does need to have further confirmation. We need to see a break above this level here, which is around 121.15 to 35, and then on towards 121.65 to 70. But the technicals are still remaining negative, so we do need to keep a watch on this. And also, we still have an ADX that is trending, so this signal could easily be negated. With all the uncertainty coming through overnight, the market staged a very significant rally in gold from the lows of 1,520 to a high of 1,549. From the surge, the market is now looking towards this level of 54. If we break it, then we are looking up towards 60, 62, and maybe on to 1,600. Intraday support at this stage is seen at 1,536. And wrapping up with oil, well, disappointingly, 54 level did not hold. The break of $54 has now given some risk of a further slide, and therefore could see a move back to 51. But for the moment, the intraday picture today, I'd rather sit out and see how it plays in the next 24 hours, so I'll be keeping to a neutral view. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report and hope you enjoy the great start to this new day.